What is up everyone, this is Anuj Vohra and welcome to the podcast. In this podcast, we will understand what are the chances of losing money in equity mutual fund and stock market. The answer is simple. There are mainly two approaches of investing in equity markets. The first is direct investing in stocks and the second is investing via equity mutual funds. Here, both have a different concept of investing. When we invest in equity mutual fund, the fund includes 50 or 50 to 60 stocks in the portfolio that include multiple stocks with different industries. So, while investing in equity via mutual funds, the invested amount is diversified. In other words, our investment is reliable on 40 to 50 companies. In mutual funds, you have net asset value, which is NAV, to calculate profit and losses. On the other hand, if you invest in 4 to 5 stocks directly, that means you own shares of a company. In addition, we can say we are heavily dependent on 4 to 5 companies. Of course, there are chances that all 4 to 5 companies may collapse and you will end up losing all your money. And on the other side, if you have invested in equity mutual funds, there is a benefit of diversification. Now what that means is 40 to 50 companies cannot collapse unless market crashes. If we take the worst case scenario, let's say 10 companies file for bankruptcy, other 40 to 50 companies will maintain the overall portfolio. So you will never see a negative return in the long run if you invest in mutual funds. Also, still now in the history of mutual funds in India, there is not a single diversified equity fund who has given a negative return after 5 years of investment period. So if you are a beginner, if you are just getting started as an investor, equity mutual fund is the best option for you. So I hope you like this podcast and I will see you in the next one.